Hey everyone, welcome back. Today we want to take a look at Polestar. Some big news, some big changes that are coming in from the Polestar new CEO. Polestar CEO announced strategic review amid drop in quarterly EV deliveries. Polestar Chief Executive Officer said on Friday the company has conducted a strategic review of its operations after reporting a 14% drop in third quarter electric vehicle deliveries. Shares of the Swedish company fell over 3%. Polestar, which is majority owned by Geely, has been grappling like rival EV makers with weakening demand for its electric vehicles owing to factors such as high interest rate, prompting consumers to pivot to cheaper hybrid cars. The company handed over 11,900 vehicles in the third quarter compared to 13,900 vehicles a year ago. Polestar recently went through a major reshuffle where it replaced the CEO and the head of design, chair of the board, and appointed a new CFO. Polestar said it expects revenue for the full year to remain stagnant. This is due to the difficult market conditions and the import duties. In 2023, the company recorded revenue of 2.38 billion US dollars. The new Polestar CEO Michael Lasceller, in his first public statement since taking over the job on October the 1st, announced a strategic review, set out a clear path to Polestar development, with an update on January 16th, along with the third quarter financials. The new CEO had this statement to say, and I quote, "The key to our future success will be the development of our commercial capability. Going from showing to actively selling cars, adopting a new, more active sale model is already supporting our ambition. As the first market to implement it are showing solid order intakes." End quote. Polestar reaffirms its target of achieving break-even cash flow by the end of next year, though at a lower volume than previously targeted. So to combat slowing demand for the electric vehicles, Polestar has been cutting costs by reducing headcounts and negotiating with suppliers to lower the price of manufacturing across its product line. The company said in August it reached a target of accomplishing 1.3 billion in external funding after facing acute financial challenges at the start of the year when its major backer Volvo Cars said it would step aside or stop funding. The company is still a long way from being funded, Shepard said, adding that Polestar will have to raise an additional capital by the second or third quarter next year. The levy of US and European tariffs on Chinese imports have pressured Polestar to grow its production base in the United States, away from China where it currently makes most of its vehicles. On Friday, it said due to the current market condition and the anticipated performance, it was engaged in constructive dialogue with its club loaner lenders, who remain supportive of its loans covenants. So that's actually quite encouraging to see that the first action of the new CEO is actually to conduct a review of Polestar's operation. This is really to find out what's really going on. You know, as a CEO, he must have a lot of data that he can see straight away. Are we making less cars? Are we manufacturing? Are we producing less cars? Are we promoting less? Is there simply less demand? You know, where are we failing? And I suppose it's critical that the new CEO gets this assessment done quickly as possible, because from there, they can probably look into it even further. Perhaps there is something that the company was unaware of, or perhaps it was a problem that they were aware of. But certainly, this will give the new CEO something to work on, some ground to work with. And the incredible thing is that Polestar actually has themselves in a very interesting situation where the future plans of their upcoming vehicles are already planned. So we now have three cars, you know, Polestar 2, Polestar 3, Polestar 4, all on the market available. And next will be the Polestar 5 and Polestar 6. So the current grid is set and the future of Polestar vehicles are also in development. That's also set. So now they can work fully on how can we deliver the most and the best to customers? And how can Geely and Volvo support us in doing that? Because if it's a problem with producing these vehicles, then it's Geely and Volvo who needs to help Polestar in that matter. However, if Geely and Volvo are already producing more than enough vehicles for Polestar, then the question comes down to the leadership in Polestar, you know? And this would be interesting, so it'd be good to see the review. Because I've strongly defended the former CEO, Thomas Ingerluth, that he actually did a good job being CEO, getting the company this far. I understand that where the company is right now, The parent company, every investor that are involved, they want the company to be more active in selling vehicles. Thomas was a very good CEO in terms of leading the brand to be a premium company. And that's what it is, based on the design, based on the aesthetic, based on the approach, everything about the brand that is set up so far. Thanks to the previous management and previous leadership that have invested so much into this company. But now it's time that the company is saying, well, now it's time we sell vehicles. So Thomas, the former management along with Thomas, is like, okay, can you now sell as much vehicles as possible? And if the previous management, including Thomas, were not able to do that, then I understand replacing the CEO. So the new CEO is basically saying, well, every car we produce, we should be selling. And I like that approach. So it's already a positive to see that. First thing is conducting a review, to be self critical, to find out, is this our problem or is this some other problem? Because if it is Polestar problem, then they need to be self critical and say, okay, we made a blunder, we made a mistake, this is our problem, we need to fix it. We're the reason why we're not selling enough vehicles. And that's what this CEO is doing actively right now. Yes, he used to work for Nikola, but he also worked for a few other companies as well that he's actually been quite successful with. So it's going to be quite interesting to see his action at the Polestar company. I didn't like the change, but at least it's exciting. At least it's exciting. At least it's something different. With Thomas leading the company, we got a calm leadership that was very professional, that was very, kept the brand premium, respected and respectful. And now it's more like business. It's business, it's business, it's business. And that's not always a bad thing. So we'll see where that goes. So let's just go through this article rather quickly. Until recently, although customers could kick the tires and go for a test drive at the Swedish manufacturer showroom, they've had to turn to the company's website to buy the vehicle. The new CEO said he launched a review of operations and strategy under which Polestar is going from showing to actively selling cars. But here's something that I wanted to touch on. Polestar seeks to arrest Plunge by selling cars via dealers too. That's very interesting. So they want to go throughout the dealership model, perhaps. Now, that is very interesting. This is a very common model that is being used across America, so it's very interesting. You get a lot of different dealerships across America selling different vehicles. And that's what it is. It's the dealership models of doing business. So it says here, Polestar Holding Automotive new chief executive officer wants to turn around the struggling electric car by selling more vehicles at dealerships, not just online after a plunging sale. I guess this would make sense because Polestar is such a smaller company compared to let's look at it like compared to Tesla. So perhaps Polestar wants to look at this from a different perspective. Like, what if Polestar was more like Audi? What if Polestar was more like Porsche? Would they sell their vehicles via dealerships? And as far as I'm aware, they do. As far as I'm aware, Polestar does sell their vehicles through dealership. And that's not always a bad thing because it's like I said, the options are you get a test drive from Polestar, you buy the car online. It's a very modern way of doing things. But, a lot of people still like to go to dealerships and get their cars in various different markets. So that's actually not a bad approach. But here's where it gets even more interesting. The third quarter brought total delivery for the first 9 months of 2024 to 32,300 vehicles, a 23% drop from last year. And they don't like that, especially the new CEO, because that's almost like a 25% fall. That's not good at all. And Polestar should at least be selling the same amount of vehicles as last year, if not a little bit more. At least the same amount, if not a little bit more. The EV maker said in August it remains confident that sales of the Polestar 3 and 4 models will boost sales in the second half of the year. So for the next remaining few months, we've got October, we've got November, we've got December. Oh my goodness, the year's done. The year is done. That's kind of crazy. They hope that the Polestar 3 and Polestar 4 will really, help the company to finish on a strong note for the remainder of the year. And I hope so as well. I really do. So I definitely want to keep up with this a little bit more to see how this goes, especially this review that it's being conducted by the new CEO. I definitely want to keep up to date with this. So I hope you enjoy this video. Thank you for watching. Subscribe, leave a like, leave a comment, and I will see you in our next video. But you do need to leave a comment to join this community. Let me hear your thoughts. Thank you for watching. Peace.